Bitcoin just smashed records by closing July at $115,800. That's absolutely historic. And even with some last-minute volatility, the bulls are clearly on display.
Right, and what's striking is how analysts are framing that dip below $115,000 not as a setback, but as a bullish retest. It's almost like the market is taking a breath before the next big move. Yes?
Exactly. It's like you're watching a runner catch his breath before sprinting again. Analyst Mags described that drop as an inverse head and shoulders neckline, suggesting that once the dust settles, we could see prices target around $172,000.
Yeah, that's pretty wild. So, you're saying this structure supports a 50% increase from current levels. I mean, that's huge for Bitcoin, especially after its record monthly close. But doesn't that seem a bit too optimistic given the backdrop of global trade tensions and macro volatility?
Well, it might sound overly bullish at first glance, but think about it. Historically, post-halving Augusts have sparked major rallies, from 14% up to 65% gains in previous years like 2017 and 2021. It's like when the conditions are just right, the crypto market is on fire.
I see that. That's a good point. But isn't August also typically one of the weaker months for Bitcoin? The data says average gains are only around 1.61%, right?
True, typically August is a bit of a lull, but in post-halving cycles, it's an altogether different story. There's this pattern of stabilization, often leading to a vertical breakout. It's like the market is gathering energy. With the bulls in control, the momentum builds until bam, a sudden surge.
Yep, it's like a coiled spring. Interesting analogy. So, despite some recent negative pressures like the US tariffs and overall risk asset declines, Bitcoin managed to stay within a pretty tight range, from $115,000 to $121,000. Doesn't that hint at inherent strength?
Absolutely. Even as traditional markets stumbled, Bitcoin's resilience shined through. The fear and greed index dipped a bit, but still remained in the greed zone at 65. That suggests that investor sentiment is still robust, kind of like when you know there's a storm brewing, but you also know the weather's about to clear up big time.
Yeah, exactly. And speaking of investor sentiment, crypto trader Michael van de Poppe mentioned that it's time to accumulate positions since a correction usually precedes a big move. Do you think this accumulation phase is smart given current market volatility?
It makes sense if you're looking at it from a long-term perspective. Sure, volatility can be nerve-wracking, but if we factor in historical post-halving rallies and the technical signals like the inverse head and shoulders, it's a calculated risk. Of course, some might argue that the macro risks, like those trade disputes, could still skew the market.
That's a valid concern. Right, that's where I respectfully disagree a bit. I mean, while historical patterns are compelling, isn't it a bit risky to lean so heavily on past trends given the current global economic uncertainties?
Fair point. And yes, no one can predict the future with complete certainty. Like any market, Bitcoin is subject to sudden shifts. But if you combine these unmistakable technical patterns with historical post-halving behavior, there's a strong case for expecting a significant upward move. It's like, the odds are stacked in favor of a vertical run.
I get that. And that target of $172,000 isn't just pulled out of thin air, right? It's calculated from the measured pattern on the weekly chart. It does sound pretty strategic if the market respects these technical levels.
Exactly. It's a strategic call. It's as though the market's technical blueprint is laid out right in front of us. And with these traders advocating that it's only a matter of time before Bitcoin goes vertical, the narrative becomes more than just sentiment. It's technical analysis backed by solid data.
Data never lies. Now, with all this bullish chatter, do you think there's still room for caution? I mean, given the unexpected macro moves like those US tariff hikes, should investors still be wary despite the technical signals?
Absolutely. Caution is always warranted. Even the most promising technical setups can be sidelined by macro events. It's like planning for a sunny day while keeping an umbrella handy. Diversification and a balanced risk management strategy remain key.
It's fascinating to see this interplay between technical patterns and external factors like policy changes. Bitcoin's ability to close a record high month amid such uncertainties is quite remarkable. And it really sets the stage for what might be an explosive August, right?
Exactly, it does. We're at an interesting crossroads. On one side, the technical patterns are screaming bullish, while on the other, traditional market pressures and global economic uncertainties create some cautious undertones. But overall, the resilience and momentum in Bitcoin's price suggest that something big might be just around the corner.
Anticipating that rocket launch. And so, while the market may experience some short-term jitters, the long-term trajectory seems promising, inviting both excitement and a healthy dose of measured skepticism.
Right, it's like the calm before the storm. You know there's an impending surge, but you also watch every ripple, every minor disturbance. It makes the space incredibly dynamic and, frankly, exhilarating to watch.
Yeah, absolutely exhilarating. With all that in play, it's clear that investors, be they institutions or retail, need to keep a close eye on both technical trends and macro developments. Any misstep in understanding one could easily throw off the broader strategy.
Precisely. It requires a well-rounded approach, merging the art of technical analysis with the science of market sentiment. That's what makes Bitcoin such an exciting asset to follow.
Indeed, very exciting. And that interplay is exactly what keeps the crypto space so unpredictable and fascinating. Whether you're an experienced trader or just a Bitcoin enthusiast, these dynamics offer lessons in risk, reward, and timing.
Absolutely. And, if history is any guide, those post-halving moments tend to herald major shifts in the market. With Bitcoin settling into record territory at $115,800, the stage is set. Investors and casual observers alike should be watching closely because the next move might be the one that truly defines
Definitely
an
a
era.
defining moment. So, to wrap it up, while we have caution on one hand due to global uncertainties, there's compelling evidence from historical trends and technical patterns pointing towards a possibly explosive August. It's a thrilling time in the crypto market, isn't it?
It really is. Just like a roller coaster with all its ups and downs, Bitcoin continues to surprise us. And investors who can balance the excitement with smart risk management might just be in for one heck of a ride.
A wild ride indeed. All right. That gives us plenty to think about. Thank you for breaking down these intricate details. It's been a great conversation exploring the record-setting momentum and the nuanced interplay of market forces in Bitcoin.
My pleasure. Always exciting to dive deep and analyze where the market's headed. Remember, keep your eyes on both the charts and the news because every detail counts in this ever-evolving crypto landscape.
Absolutely, every detail does matter.